Hey traders, Akil Stokes here of TradingPower.com, and thank you once again for joining me for this week's live room review. As always, I'm going to give you guys a few flashbacks or a few recaps from our live room sessions this week. Also, last week I got some very positive reviews. If you saw last week's video, you know I threw in some behind closed doors session of live action from the live room. You guys seem to like that a little bit, so I'm going to throw some of that in again this week. And after you're done getting through those, I want to talk a little bit about the theme of this week's review, which is trading is a grind. And well, I'll come back after the flashback videos and talk to you a little bit about equity curves and how a real equity curve looks. So enjoy the videos, and I'll see you guys in a few minutes. Hey traders, Kill Stokes here. We had a awesome start to the week in the ratio room. I mean, today it just seemed like there were really good questions being answered or asked, well, and answered, I hoped. We had a lot of analysis to do, and then we had some sporadic movement in the market and had to do a lot more analysis, but it was just felt like one of those really great days. And we actually made some pretty good profit as well. Now I didn't add everything up yet, but we had one losing trade and two winners. Loser was here on Aussie dollars. He had a busted out cipher pattern to start the day. But then we hit a real good one at euro dollar at the same time. We had a structure based trade where if we go out to well, let's do this. Let's go out to a 60-minute chart here on euro dollar, and you can see we had a head and shoulders pattern. Looking at this area right here. Now I don't trade head and shoulders personally, but I do trade structure based trades. So we paid attention that to when the market broke and closed above the structure, we just simply waited for a retest. So went down to my 5-minute chart. You can see we got the retest down here. We got an ABCD pattern at Fibonacci confluence, double bottom. RSI, I think we went close to oversold. Didn't think we went oversold. Close to oversold. But we had a really good CTS score on this trade. And what do? Well, we bought them up. And well, this thing has rallied up. We hit target ones. Now we're shooting for extended targets. And since we got a break and close, looks like we should be getting that. I would expect us to shoot up here, retest previous structure as you see, and then make an extension up to our target twos, giving us a very good trade. As you can see, we're up about 40 pips right now, looking to get about 30 more, so looking to get about 70 pips on target two of this trade. Very similar with euro yen. We actually came down into a channel here, and we watching this thing go up, down, up, down. We actually missed a short opportunity here, but when we came back down, we had another opportunity to buy him up down at the very lows of this channel, and we did. Now, as you can see, this price action spiked through, but because we had smart stops, we had this 125 even handle, which we talked about being our safety net. These psychological numbers. We made sure to get stops safely underneath there. And what happens? Well, market double bottom with RSI divergence once again there. Shot back and shot all the way across the channel, giving us a nice winner. First, want to recap you guys on the euro dollar trade from yesterday. Remember, we took this in the live room. Jason posted to the syndicate as well. But remember, we got long right around this area yesterday. And in the live room, we hit target one right up here. We did spike up, get our target twos hit. So a good trade for about a little under 100 pips. In the live room today, we took one loser on euro dollar, another structure-based trade, but we did have one on Aussie dollar, which you can see is well, not a winner yet. We're still waiting to see if we get up there. But another pure structure-based trade, and I'll go and show you without my DSR levels. AUD, USD. There we go. And again, just a pure structure-based trade. If we erase everything for a minute, we'll see this. Market made a move down. We came down to this level and, well, put in a nice double bottom. So, boom, boom, boom. You can see market got down, penetrated the close, but didn't break the lows. Nice double bottom. We then saw the market push up off of that. And what we're looking for is a trend continuation trader. And this could actually be we came a little short of a 26.18. But we're just looking for a retest of previous structure. Again, we know previous structure is right here. Boom, it's big, it stands out for us. If we look left, you'll see a little more over here as well. But we wait for the market to come down, retest that previous structure. Happens to be at a Fibonacci retracement as well. Bang, 382 and a 50%. And then we look at this as an opportunity to buy it up. Buy it up for potential targets where? Well, at a retest of our previous structure highs. And again, it's simple, just simple structure-based trades. Structure leaves clues. If you know how a trend works, if you know how the market moves, you can make a killing off these. 5-minute charts, 15-minute charts, hourly charts, 4-hour charts, doesn't matter. Markets move the same on all time frames, and all markets. You can do this in stocks as well. Oil, gold, doesn't matter. But a nice simple trade again. We'll have to wait and see if we can get target ones hit. We're still on our way up there. Because we did make new structure highs, we were able to roll stops up from originally down here, looking at maybe a 20 pip loss, to up here, to looking at an 8 pip loss. And one of the things I stress in the live room is that many traders don't take the time to really learn about trade management, meaning they concentrate on, all right, how do I see this? How do I do that? How do I get into a trade? Well, half the battle, maybe even more than half the battle, is once you're in a trade, how do you handle that? And trade management is very important because, well, now we set ourselves up where even if we lose, say market just big black candle comes down and just rolls on us. Well, now look, we're only losing 8 pips instead of losing 20 something pips. And again, if you want to be a successful trader, you got to learn how to conserve those losses. What once was just a small cipher pattern with maybe not too much room to really profit off of, we're looking at what, 10 pips? Well, now we have this. Boom, the cipher comes down, completes. We can adjust our targets accordingly. So instead of looking for a potential 3D2 target 1, 618 target 2, we can trade this like an aggressive C, where we look for target 1 at a retest of our B leg, target 2 at a completion of our pattern. But here's a way, again, you can use an advanced pattern as an entry into another pattern as well, or just building different cases. Now, one thing, here's an example of, and I know Lazzy, is she in here today? Yep, Lazzy. Lazzy talked about only taking patterns with the overall direction of the trend. And here's a great example of how that filter could have kept you out of a trade. Again, we had a Gartley pattern like this, right? X to A to B, B to C, C to D down here. Well, looking left, what did we have right here? What happened right here, guys? What happened here and what happened here? For you structure traders out there, what did we get? Yep, there we go. Yep, lower low, lower high. We got a break and close. It was just barely, but we got a break and close below this structure level. We got a break and close below that structure level, signaling that this trend is starting to reverse. So we go lower high, then what do we have? Boom. Lower low. Lower high, lower low. That means something important. What do we have followed by that? Another lower high. So my prediction is that this market is going to push lower. Now, that being said, I don't have a rule for following the trend as far as advanced patterns go. I have to take advanced patterns whether they're with the trend or against the trend, so I had to jump in. That's just how I trade patterns. But again, reminding me of Lazzy's rule about trading with the trend. If you're saying I'm only going to trade advanced patterns that go with the trend, well, we know this is a bullish Gartley. And this market technically just went bearish. So this was one that you'd probably say, not you probably would, you'd have to say, hey, I'm gonna play the sideline and just stay out of. And in this case, it would have saved you. 618, 1618. Actually, not at a bad level to look for a long on New Zealand. And real quick, what I just did was, other than draw the ABCD, just drew in some Fibonacci's. Took a swing high, the swing low here, and you can see we got a 1618 extension. Took a swing low to swing high here, You can see we got a 618 retracement. RSI is what? RSI is oversold. If we get a retest, boom, with some RSI divergence, valid long entry, double bottom, ABCD completion. We can add our CTS score up. ABCD is going to give us 2 points. And remember, these ABCDs, they don't have to be exact. But ABCD pattern, 2 points. Fibonacci confluence, that's another point, 3 points. RSI oversold, that's 4 points. If we get a retest, that's 5 points. If we get a retest with RSI divergence, that's 6 points. CTS 6, looking left. I'd call this minor structure. 7 points. CTS 7. So we'll keep New Zealand on the radar too. Dollar Swiss. Rob wants to look at 15-minute chart. For a potential bet. Looking at completion right now, X to A. You can actually make a case for a few patterns here depending on when you started watching it, but we'll look at the bat first. X to A. A to B, coming to our 50% retracement. We had our B to C retrace here, and looking for a CD completion for our bat pattern up at our 886. So up at 92.37. So really a sell at market right now. Bat pattern traders on dollar Swiss. Yeah, and that was the pattern. I'm not gonna try and make a case for this Gartley or anything. No, I'm not gonna do that. Yeah. So yeah, valid bat pattern here. Dollar Swiss 15-minute, 92.37. Sell it up. Get stops above X at 92.42. And as always, targets. Draw that Fibonacci in from our A leg to our D leg, and pick and choose your targets. So again, I want to talk to you guys a little bit about how a real trading equity curve looks to professional traders. Now, the misconception is that many traders come into this field thinking they're going to see this. Just a constant, steady rise in money. I'm going to make money every day, every week, every month, what have you, every trade, basically. The reality is a little different. In reality, a trading equity curve looks very much like a trend, meaning we don't just go straight up. Instead, we'll go up, have a good winning streak, give a little bit back, and then the plan is to, every time we get on these win streaks and have winning trades, that we continue to make higher highs and higher lows. So your equity curve ends up looking something like this. And then just like a trend or just like the market, every once in a while you hit that rough period of time. And this is what separates the consistently profitable traders from the traders that end up blowing an account. The traders that end up blowing an account, what happens is their equity curve will do this. They'll get into a rough patch where they'll lose some, win some, lose some, and then somewhere in there they have a mental breakdown or a psychological breakdown, and they start making mistakes, and they see this. They see lower lows, lower highs, lower lows, and just starts a downward spiral. Now, professional traders, again, because we have experience, because we know how the market moves, and because, we plan our trade and always trade our plan through thick and thin, this is what ends up happening to us. We may give some back, and we'll run into times right now where I say trading's a real grind, where we just go sideways. We win some, we give it back. We win some, we win some, we give it back. And we start channeling. Now, the difference is we understand that we have a system with a positive expectancy, meaning that over time, our system or the strategy we trade is going to make profit. And although we deal with times like this, eventually we're going to break out these channels and then once again continue to make higher highs and higher lows and higher highs once again. Right now it seems like, and again, January's been tough. February is tough so far. We're, I think, about break even in the live room. We had a good week this week and brought ourselves back to break even, but we're basically channeling again. But the difference is, I'm not getting frustrated. I'm not saying, oh man, I'm not making this much pips. I haven't made this much pips this week, or I didn't have a winning day, and I'm gonna try something different. I'm gonna stop trading patterns, or I'm gonna increase my position size, or anything. What I'm gonna do is just keep trading my plan because I have confidence that, and not even confidence, I have numbers to back it up that my trading plan, the system that I trade, is profitable as long as I keep trading it. So eventually, and it could be this week, could be next week. It could be March. You never know. Eventually, I'm going to break out this channel and continue on my way up. And again, that's how you stay consistently profitable over time. So as always, if you're new to this video, I appreciate you watching me. If you want to get on the email list where you get an update whenever I do a new article, a new post, or a new video like this, look on the right-hand side, right-hand shoulder of the Trading Powered site, and there should be a section where you can enter your email address. And as always, if you have any questions, comments, or concerns, feel free to shoot me an email. My email address is akil@tradeempowered.com. And, well, always remember, traders, plan your trade, trade your plan. Take care.